For the last few Star Trek-centric videos, we have emphasized that Star Trek's newly remerged parent company ViacomCBS is having financial difficulties. Traditionally, Star Trek's considerable revenue stream from merchandising would have helped mitigate any such situation. However, under the reign of Secret Hideout and Alex Kurtzman, that stream has dried up. Despite the franchise's past history, Star Trek isn't helping them one bit right now. We are about to get an idea of just how badly the brand has been mismanaged under the reign of Bad Robot and Secret Hideout. In this video, we will take a look at how grim things really are for ViacomCBS and how they may have to start selling off their assets in order for the company to survive. To that end, we will also explore the chances that Star Trek could be among those assets. To ever so briefly recap our earlier coverage, it was Grand Old Man Sumner Redstone who split the old Viacom Corporation into two corporations, the CBS Corporation and a newly formed corporation also named Viacom. His reason for doing so was to further what each underlying business was doing. Unfortunately for Star Trek, that property was for relatively arbitrary reasons taken away from Paramount, the company who had nourished it into the golden goose it had become, and given to CBS, whose only contributions to Star Trek up to that point had been rejecting the pitch when it was offered to them back in 1965 and canceling Star Trek Enterprise the year before. While CBS let Star Trek languish, they were exceedingly profitable in pretty much everything else. By contrast, under the new Viacom, Paramount would become a bomb factory. Fast forward to modern times, and what we left as 2019 was nearing the end was a successful CBS Corporation and a Viacom Corporation with more than $18 billion in debt. While splitting, the old Viacom Corporation had worked well for CBS, the new Viacom floundered. This begged the question if both corporations might not have done better if they had remained under one corporate owner. Keep in mind, this was the only instance of this occurring. No other entertainment corporation had done anything of the sort, not before and not after. No one else was tempted to repeat Sumner Redstone's experiment. Quite the contrary, the rest of the industry consolidated multiple businesses under one corporate umbrella. Against this backdrop, Sherry Redstone wanted to reunite the empire her father had split apart. She fought for years to that end, mostly against the heads of the CBS Corporation and the new Viacom, who were said to dislike each other so much that they would both rather be manhandled by Disney than as much raise a glass to the other's honor. However, after the most notable opposition was forcibly removed following a series of seemingly coordinated Me Too accusations that were published in print right before a very important vote, everyone else soon fell in line. In December of 2019, the CBS Corporation and Viacom were remerged. The reunification, though, would not be easy. For many of the employees, both at the executive and lower levels, there would be redundancies. And financially, the remerger meant weighing the successful CBS Corporation down with the mismanaged and debt-ridden anchor that was the Viacom Corporation. The newly reformed ViacomCBS began its existence with a debt of $18.7 billion, $800 million of which were due to be repaid over the course of 2020. We have learned that one of the conditions the Department of Justice made for allowing the remerger to happen was that the newly reformed corporation would be financially healthy and solvent, significantly more so than Viacom had been. The share price had to remain above a certain level, and an earnings plan for 2020 and beyond had to be presented, and it being followed to the letter was a requirement for the necessary approvals to be given. They were, and in December, the remerger was executed. All they had to do now was stick to it. As it turned out, that would prove to be impossible. At the same time as the heads of CBS and Viacom and the Redstones National Amusements, the ultimate owner of both, were working hard executing the merger, the Chinese authorities were working hard suppressing information about the scale and scope of the latest viral epidemic they had been hit with. By March of 2020, Western civilization was placed on lockdown. Among the innumerable consequences, the earnings plan for 2020 went out the window. One thing the lockdown of society has done is reveal clearly which industries and which companies are fundamentally and financially sound and healthy. It also reveals which ones that in reality are so fragile that it only takes a few weeks worth of cash flow interruptions to send them to the brink of bankruptcy. One key example here includes the comic book industry, where it has now been revealed that sales to actual paying customers are so low that no retailer has any cash reserves. And more troubling, neither does Diamond, the monopolist distributor. Another includes AMC theaters, which we will get back to in a later video. In the case of ViacomCBS, the problem isn't so much that they'll fold at the very first cash flow interruption. This is, after all, a major entertainment corporation. Under the current situation, theatrical distribution is out for the indefinite future, and production of any new content is at a standstill. But this is something that affects all the entertainment corporations equally. Everyone is hemorrhaging money. However, ViacomCBS alone are due to repay $800 million of their $18.7 billion debt this year, and ViacomCBS alone cannot allow their market value to fall below a specified minimum threshold, as per the Department of Justice conditions for allowing the remerger in the first place. While immediate disaster has so far been averted, ViacomCBS is under increased scrutiny due to their financial obligations. Unfortunately for them, investor confidence is low, and as a testament to how badly the property has been mismanaged by both Bad Robot and Secret Hideout, Star Trek isn't even a blip on the radar. Emphasizing the increased scrutiny and lack of investor trust, Forbes released an article on April 8th describing the situation, titled, "ViacomCBS's downward spiral is accelerating as talk of unraveling grows." In it, the remerger is described as a strenuous uphill climb, which the current pandemic and ensuing lockdown added a large bag of rocks to. According to Craig Huber of Huber Research Partners, the merger was a huge mistake. They should have sold Viacom many years ago rather than saddle CBS with it. According to the research firm of Moffett-Nathanson, the underlying problem here is that despite the $28 billion in revenue, the company generates a paltry amount of free cash flow. They wrote in a report and published on March 27th. In it, they also stated, "It's mind-boggling to figure out where the cash flow is actually." The cash flow isn't likely to be found soon, as the Paramount Film Studio can't make movies right now, nor can it collect revenue from showing those it has produced since theaters are largely closed. The TV side is hit hard from canceled sporting events, and their networks MTV and Nickelodeon have been hemorrhaging viewers for years, although efforts to revitalize MTV do show preliminary promise. The biggest CBS legacy network, SHOWTIME, has dropped viewers for 2 years in a row, but in an effort to combat this, they have increased production output by 30%, a move some analysts criticize, but others again point out that a solid hit on SHOWTIME would greatly help matters. While not in this article, Midnight Judge has learned from our sources that one of the bigger bets for SHOWTIME to this end is an in-development high-end series they were hoping would play well for them as Dexter once did, namely Ripley, based on Patricia Highsmith's novels featuring conman, art dealer, and sometimes killer Tom Ripley. The upcoming series is showrun by Oscar winner Steven Zaillian and stars Andrew Scott in the role of Tom Ripley, and aims to adapt all 5 Ripley books over the course of 5 seasons. It very well could prove to be another Dexter-level hit, once it airs, that is. It is still technically on track to shoot in southern Italy in the fall of this year, but if things have not returned to normal by then, it could be looking at extensive delays, greatly adding to the parent company's financial woes. In addition to a sizable hit on SHOWTIME, Forbes also points out that help could come from a viable new film franchise that could challenge Disney's Marvel and Star Wars franchises or the DC Comics superhero films from Warner Bros. Interestingly, the article does not mention Star Trek by as much as a word to this end, and with the remerger, Star Trek is indeed now back under one roof, although it is still hamstrung being under the rule of Secret Hideout for another 3 years. So why isn't Forbes mentioning Star Trek when they themselves say ViacomCBS needs something like Star Wars? The likely answer to that is that under the rule of Bad Robot on film and Secret Hideout on TV, Star Trek has been run into the ground. For the old Viacom, before the initial split between the CBS Corporation and the new Viacom, Star Trek and its merchandising revenue was both a cash cow and a golden goose, one whose seemingly never-ending stream of merchandising revenue was the envy of Hollywood. Star Trek and its associated income alone could bail the company out in an otherwise bad year. Over the past decade and a half, that revenue stream has all but dried up. Over the course of 3 movies, Bad Robot oversaw Star Trek's decline on film from a successful 2009 reboot to one of the biggest flops of all time with Star Trek Beyond. The money that cost the Chinese investors, and therefore the Chinese authorities, was such that Beijing implemented restrictions on investments in Hollywood. On television, Star Trek has failed to generate any income for ViacomCBS, outside of what is left over from Netflix and Amazon's international rights fees after Secret Hideout have taken their cut. Worse yet, even the steady stream of merchandising income based on the classic iteration of Star Trek has now slowed down to a trickle. And as Midnight's Edge has covered extensively in the past, there is no merchandising income from the new iteration of Star Trek to replace it. As of today, after the expenses have been paid, Star Trek, for all intents and purposes, does not produce any income of note for ViacomCBS. That is the likely reason why Forbes does not even mention the brand by a word, and that in turn is a testament to just how badly the property has been mismanaged by Bad Robot and their Section 31 wing, Secret Hideout. In case you are wondering, yes, that would be the same Bad Robot that on Lucasfilm and Kathleen Kennedy's behalf have seen Star Wars box office revenue plummet from more than $2 billion with The Force Awakens to barely crossing $1 billion with The Rise of Skywalker. But what of CBS All Access? As you may recall from our earlier coverage, Les Moonves only greenlit Star Trek Discovery as a means to the end of promoting the streaming service CBS All Access, which was to be his legacy. How did that work out? Surely, the 2 seasons of Star Trek Discovery and the 1 season of Star Trek Picard released on it so far must have contributed towards making All Access a sizable hit. Not quite. We've been saying for quite some time that CBS All Access is a flop. Forbes has now confirmed that assertion. In their article, Forbes bemoans ViacomCBS's failure to launch a successful streaming service to take on Netflix and Disney+, and even state that prior deals with Netflix have been detrimental to CBS All Access. Again, without mentioning Star Trek by as much as a word in conjunction with CBS All Access, which is a weird omission given that Star Trek is supposed to be one of the service's flagships, especially with Star Trek Picard out now. Forbes does, however, suggest ViacomCBS should merge CBS All Access with a competitor's service, such as NBC Universal's Peacock or Hulu. ViacomCBS themselves have already told investors that CBS All Access is going to be reworked and rebranded in with the corporation's other services, which is another way of saying that CBS All Access in its current form will be shut down. Outside of that, and with all production and all sporting events currently on hold, what else can ViacomCBS do to get out of the troubled waters they currently find themselves in? One of the stipulations the Department of Justice instituted on the remerger going forward was that the new company had to be fiscally healthy, meaning the market value could not fall below a certain threshold, which in turn means the share price cannot fall below a certain level. We do not know exactly what that threshold is. However, indications are the share price has been close to it on several occasions. Valued at about $25 billion after the merger, the combined businesses of ViacomCBS are now trading at a market capitalization of less than $10 billion. According to Forbes, Sherry Redstone herself has purchased $2 million worth of ViacomCBS shares in the last 2 months. According to our sources, she did this explicitly to prevent the share price from falling below critical levels. This is a short-term fix, but little more than that. Sherry Redstone doesn't have an endless supply of cash to buy stock for. And even the ViacomCBS parent company, National Amusements, are taking a hit from theaters being closed during the lockdown. According to the analysts Forbes spoke with, ViacomCBS only has one way out of their current predicament, namely selling assets. ViacomCBS already announced they were selling their publishing wing, Simon & Schuster, but that will not be enough. Many assets are advocating the sale of far larger assets, such as all of Paramount or the Showtime networks in their entirety. Do note that those are only analyst recommendations at this point, and not ViacomCBS's stated intentions. However, in the current situation, it is only a matter of time before they have to decide which aspect of their business to sell off in order for the company as a whole to survive, because that is what is at stake here. Under normal circumstances, the sale of a property like Star Trek would not even be considered. However, these aren't normal circumstances. If the right bidder were to present ViacomCBS with an offer they could not refuse, they might not have any other option than to sell. The challenge for ViacomCBS is that if they were to sell Star Trek, that would only help them out in the short term. Only a detailed financial analysis would reveal the exact current value of the Star Trek brand. However, keep in mind, in the last 5 years, the merchandise revenue has all but shriveled up to nothing. It lost Paramount in the vicinity of $100 million. And Discovery and Picard together earned CBS little more than pocket change after all the expenses were deducted. ViacomCBS has to sell off something that will bring them multiple billions, ideally enough to either pay off their debts or a large chunk of them. What may keep Star Trek in place is that unless someone is willing to substantially overpay relative to the brand's actual fiscal value, or gets it included in a larger package, Star Trek in isolation just might not be worth enough to sell off at this point. The brand mismanagement over the course of the past decade and a half has been that bad. Let us know your thoughts on all of this and what you think they should do in the comments.